Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news an Aussie banking royal commission may be closer than expected. But first, US consumer spending jumped markedly in September, rising 1% from August, up 0.6% in real terms. That is the fastest rise in over 8 years. On an annual basis, PCE, the Fed's preferred measure of inflation, was up 1.6%, which is actually below their target of 2%. The latest regional Fed survey, this time from the oil patch, has seen a reversal of sentiment, with the Dallas Fed saying its region is now surprisingly bullish. And Canada is expressing concerns about troubling US negotiating proposals in their NAFTA renegotiations. They're preparing for anything. Basically, no one seems to know what the US really wants, and that probably includes the US negotiators. And across the Atlantic, there may be existential threats to the EU and Spain, but actually everyone seems pretty optimistic, consumers especially. They haven't been this bullish since just before the GFC. And London-based banking giant HSBC said its huge restructuring drive is finally bearing fruit. The behemoth has seen its profit rise in recent months, thanks first and foremost to the brisk Asia businesses doing. Overnight, it reported a $14.9 billion profit for the 9 months to September, a 41% jump. And in China, their big four SOE banks posted double-digit increases in lending income in the third quarter, validating some of the earnings optimism that has fueled a rally in their shares this year. Their gains have come at the expense of smaller rivals and under the umbrella of regulatory restrictions on competitors. In Australia, it looks like the government is about to lose support from 3 of its own members who will cross the floor to vote for the ALP Banking Royal Commission. In New York, the US Treasury 10-year yield has slipped further and is now down to 2.37%. Across the Pacific, Chinese government bond yields jumped unexpectedly, with their 10-year yield now up to 3.89%, and their 5-year leaped even higher, now at 3.94%. Fear of new market interventions seems to be driving the sharp rises in yields. These changes came as Asian stock markets had a broad sell-off yesterday. And the price of crude oil is basically unchanged today. It's still just over $54 a barrel, while the Brent benchmark is just over $60.50. The price of gold is up $7 to $1,274 an ounce, and the Kiwi dollar is basically unchanged from this time yesterday, but there's a whiff of softness about. We're at 68.7 US cents, and on the cross rates we're at 89.5 Aussie cents, and against the euro at 59.1 euro cents. That puts the TWI at just under 71.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.